Buying Melbourne, where capital meets property. I'm your host, Madeline Roberts, and today I'm joined by two very special guests who were very tricky to get on because they are very busy. So today I'm joined by Ganesh and Marc from Ganesh Legal. So
Hi.
Hello.
before we dive in today, we just wanted to remind you that today's topics will be general in nature. So if you relate to anything that we discuss, you will need to sort out your own legal advice. Do you both want to introduce yourself? Tell us a bit about yourself, how you got into law, and I suppose anything that my listeners might want to hear.
All right, I might start off first. So my name's Ganesh. I'm a solicitor, principal solicitor at Ganesh Legal. It's a boutique practice. We have two offices, one in Sandringham and one in Mornington down in the peninsula. So I started out as a solicitor in 2012. My background is from Singapore. So we moved here, early 2000s. And then, obviously went to uni and qualified as a lawyer. And in the midst of COVID, I bought a practice and tried to run that remotely during all
Did you? How do you do that? How do you run a practice remotely?
Well, because you had to, with COVID regulations, you couldn't meet people face to face. So, we do a lot of work with elderly clients. And, Madeline, you were aware that at that time, the real estate industry was just completely, sort of put on mothball at that time during the lockdown. So there weren't many properties being transacted. So, we were doing quite a fair bit of conveyancing work at that time. So that really fell off a cliff. We were doing a lot of estate work. We were doing a lot of estate planning work. And a lot of that involved meeting clients face to face. So that work also was slow and really dropped off. So we really hung in there. But I must say the post-COVID recovery was phenomenal, especially with property as well.
Yes, it was. I agree. So a lot of Australia actually boomed. Even Melbourne, it did. We cooled down a little bit afterwards, but property did really take off post-COVID for sure.
Yeah, I mean that was a phenomenal period where you had this pent up, people wanting to buy and there were a lot of people wanting to sell. So it really, the transaction volumes doubled, in some cases tripled, and we did pretty okay during that time, and that led to us expanding into the peninsula, which is always a great area, because when you look at Melbourne as a market. The peninsula is always a little of a laggard in a sense, because a lot of it look at it as a retirement sort of place. A lot of people look at it as a downside. Well, sell up and then move to somewhere quiet by the beach. But what
A
we
lifestyle
saw,
choice, isn't it?
a lifestyle choice.
Yeah.
But what we saw during COVID was a lot of people moved to the peninsula to do remote work.
Yes, and that's what actually really put pressure on house prices on the peninsula at the time. That's why we had such a slow recovery then when people had to return to work, because it really did affect things at that time.
Yeah, no, so that was a really interesting time as well. And so, once we settled down, we now run these two offices, and we do a mix of property work, commercial work, a lot of estate planning, because the estate planning industry has become more complex because people are holding assets, whether it's property, whether it's shares, whether it's cash, whether it's Bitcoin and cryptocurrency in various asset classes. So not everything is covered by a will, and by your estate.
You're right.
So we're starting to do more complex work in this area with deeds and various other instruments. So that's really taken off. I mean, we do a lot of dispute work as well, and that's just par for the course. We also do family law, so separation, divorces, and that sort of thing. So quite a varied variety of work. But we're here today to talk about property, and I'd just like to mention that property is such a interesting area. Especially when you talk about the investment space, you've got people buying property in trusts, you've got people buying property in companies, a lot of people still buy it in their personal names. Although I think the accountants are starting to get to them before they buy and settle to try and, talk about creative strategies to hold assets, because before you do anything, talk to an accountant, talk to your financial person, and find out what is the right vehicle. Because if it's going to be acquisition of multiple properties, you want to make sure that the tax position is correct. And what's the end game? Is it going to be a sale? You got to factor in capital gains tax and all that bits and pieces.
Yeah, some excellent points. Thank you, Ganesh.
Yeah.
Mark, do you want to tell us a little bit about yourself as well?
Sure. So my name is Mark. I am from Singapore, like Ganesh as well. Now, my experience with the legal industry is not very much in the practice area for the past 10 years. So I started out as an in-house counsel with various companies over the past 10 years before coming here. Now, the thing here is that I've never told people this before, right?
Ooh, okay. We're about to get some sort of hot goss.
I've never liked the idea of practice.
Okay.
Right? Because it's just too much responsibility on a practitioner, right? So which is why I have always stuck to my comfort zone, which is in-house practice, which is being an in-house practitioner in that sense, right? Because you don't have the courts, you don't have clients coming in, right? You're answerable to one client, which is the company, right?
Okay.
So in that sense, I was pretty much stuck in just in-house. So now I've worked in various jurisdictions, the US, Singapore, in the UK, as well as Cambodia before coming to Australia.
Yeah, we had a chat recently and you've done a lot of interesting things. There's so much knowledge you have of different things from overseas that vary quite a lot to Australia and Australian property.
Correct. But I'm not exactly the property guy.
No.
I think Ganesh is because it's been in practice for the longest time.
Yeah.
Right. And I'm still learning. Right. And so my role in Ganesh Legal really is it's really in the commercial and corporate space.
Sure.
Right. So I do deal with property as well, but not in the sense where it's day in, day out property. Right. Yeah. So that's pretty much my experience. And now, as a legal practitioner, which is really out of my comfort zone, I actually find it very, very, very fulfilling.
Amazing.
Yeah. And I'm actually glad I made that step of faith in that sense, right? To enter this space of legal practice. Yeah.
Amazing. And what's it like working for Ganesh? Great.
Well, I think it's good because we have a very good dynamic.
Yeah.
I think mainly because we're from Singapore. So
Yes.
we understand each other.
Okay. And so did you know each other before you started working together?
No.
Oh, okay.
Yeah. So Ganesh was actually introduced by a mutual friend.
Yeah.
Yeah. And I basically met with Ganesh and I am here today.
Amazing.
Yeah.
Okay. So, Ganesh, before you were mentioning some different ways to protect people, in terms of structures and things like that, what are some of the largest financial mistakes that either of you see when it comes to, I suppose, anything property related, obviously?
Yeah, I mean, it's such a minefield because it's very important that people first of all map out what is the end game. If they're into if they're mom and dad investors, or even if they're more sophisticated investors, what is the end game? Are they looking to hold a bundle of properties in a trust? Are they looking to sell some of them over the years, pay the gains, capital gains tax, and then fund their lifestyle? So it's very important. And that's not something me as a solicitor can answer because it's really an accounting issue.
Sure.
So it's a financial advisory issue and accounting issue that people must get advice. When it comes to the structuring, there's obviously a discretionary trust, or what commonly known as a family trust. Where you have a corporate trustee as the trustee for your family trust, and any income that is received can be distributed to multiple beneficiaries. Could be a spouse, could be children, could be grandchildren, nephews, nieces, depending on how the trust is set up. And that way, the tax position is managed effectively. But also, what it also means is that there's also asset protection as well. So if someone's running a business or someone's got, various things going on, the assets are shielded from themselves as an individual, right? Because if you get sued and you own a multiple properties in your name, those properties are now subject to recovery of those debts.
Yeah, okay.
Okay.
I actually have a question to ask on that. So if you do change like the ownership amount, does that actually protect somebody?
In terms of,
So if let's say you have two people and you change it to 99% ownership and then 1%, does it actually protect?
the answer
owner?
is if they're on title as co-owners but tenants in common,
Yeah.
which is not joint ownership, right? So it's tenants in common as to specific shares. In this case, 1% and 99. Then the individual with that 1%, that's all the ownership is. So their interest in the property is restricted to just that 1%.
Okay.
Right, and the 99% owner gets really the bulk of the share of the property.
Okay. So they are quite safeguarded in that instance.
That's right. That's
Interesting.
right.
Okay.
Yeah.
Because it's interesting, because now coming from a Singapore perspective,
Yeah.
right? The general sort of arrangement is always 50-50 with your spouse when you buy a house,
Yeah.
right? It's not a very common arrangement in that sense where people go into TIC, which is tenants in common, where 99 and one person holds 99% and the other person holds 1%, right? But there are some smart people who tries to outsmart the system,
There always is, yeah.
right?
Yeah.
And the very reason why they actually have that sort of arrangement within themselves is because when they dispose of a property in Singapore, you are only capped at that 1%, right? Which is like, for example, your stamp duty, right? You can actually buy out your partner's share and then use your partner to then buy another property. Because
Okay.
if you were, say, for example, were to buy another property together, right, you would then attract what's called the ABSD, which is the additional buyer's stamp duty, which is a lot of money.
Right.
Right. So I'm not exactly sure what the percentage is, but if I remember correctly, the second property should be around 30%
Okay. And
of
so
the purchase price.
why does Singapore have that in place, do you think?
Well, basically, it's to curb people from just owning too many properties.
Yeah, right.
Because it would drive up demand.
Okay.
Yeah? And if that happens, property prices would just go skyrocket.
Okay, but they're already a lot higher there than they are here, aren't they? Because you did say, and people will hate to hear this, that Australian property is cheap.
Can I want to answer
Sure,
that?
sure.
And,
Go, Ganesh.
In the 2000s,
Yeah.
right, in the mid 2000s and all the way up to say 2015, Australia experienced a spike in property prices, and that was a lot of it was driven by Chinese money coming into the country. So mainland Chinese money coming into the country.
What attracted them at that point, do you think? Do you know?
Look, a lot of it was capital flight from China, because obviously it being a communist country, lack of democratic institutions, just uncertainty, right? So people, especially business people, wealthy individuals, wanted the children to come here and study here and relocate here, and property was one part of that, right? So they bought a lot of properties, and that caused a lot of assets to go up as well. So property prices went up a lot during that period. A lot of it was driven by Asian investors. I'm talking Chinese, Singaporean, Malaysian, Indonesian. A lot of the Asian capital came into Australia and drove up property prices. Unfortunately, now it's not so much the case, right? There's not so much Asian money coming into Australia to drive up property prices the way it did,
Yeah, I looked at the stats recently and the percentage is actually really quite small of foreign money coming in, despite what people like to say.
The perception is that property is unaffordable because of overseas buyers. It might have been the case, maybe 10 years ago, but now that's really not the case.
No, I know when I'm buying property for clients, I'm not up against international buyers.
Yes.
So, yeah.
Because it's very interesting because, I'm on Instagram, right? And then you see the reels.
Yeah.
There are basically reels on auctions. And then you see the locals hanging around the auction. And then all of a sudden you see this Chinese guy pull up and then come and say, hey, you know what? I'm going to buy this for like $1 million when the bid was like 500,000.
Oh yeah, I think I've seen a reel like that. Yes, and people like to put stories on things.
Yeah,
It's
yeah.
a bit of a narrative, and it probably makes people feel better if they can't buy into the market as well, doesn't it?
Yeah, but the stereotype is real though, because at the end of the day, right, if you look at Singapore's market as well, right, it is also driven by, put it bluntly, Chinese money. Right?
Is it? Okay.
Yeah, so there are a lot of foreign direct investments in that sense, right? That comes in. Now, even they have very high ABSD, which is the additional buyer stamp duty, right? For foreign buyers.
How high is it?
It's very high. I'm talking maybe about 50-60%
Okay.
on the purchase price. So if you're buying, for example, a $5 million property, right, your stamp duty is 2.5 mil,
Wow.
right? And they're like,
For
yeah,
foreigners,
yeah.
so
And
that's
they're
why
like,
foreigners aren't buying in.
no, they are buying
Oh,
it.
the Chinese are, sorry, but like anywhere else is not.
Chinese, Indonesian, whichever, right? Wherever they're from,
Okay.
right?
And so what's prompting them to do that then? What's the incentive?
It's a safe haven,
Safe haven.
right?
Okay.
See, Singapore is a very stable market. At least that's the perception of a lot of these Chinese investors, Indonesian investors. So property is very secure. And in Singapore being a city state, it's a very small island. So any property that you buy there, you sort of know that, there's not much land to develop more properties. So it's a secure, safe investment, even if they have to pay a premium to enter into the market, whether it's 40 or 50%.
Yeah, wow.
People think that's worth it, And also, like what Mark mentioned, there's a point that people don't understand. And Singapore does not have a capital gains tax.
Okay.
There's no capital gains tax in Singapore. So
Interesting.
in essence, what a lot of investors are looking at is if they buy property and pay this high, it's essentially front loading your CGT upfront
That makes sense.
because you don't pay anything on the way out
Yeah, that makes sense. And so what do you think the average annual capital growth rate is?
in Singapore.
Yeah.
I'll let Mark answer.
capital growth, as in for if you dispose your house.
How much do you think property goes up each year?
Oh, okay. So let me
in
just give you
value?
a very good example of my property that I bought in 2017.
Great.
Right? I bought what's called an executive condominium.
Yes, you
Right.
kind of outlined this to me. So do you want to talk about what the difference
Sure.
is between a standard house in Australia versus
Okay, let me just give you the various categories in Singapore first, right? Where we have what's called HDB. HDB is the Housing Development Board.
yeah.
They are basically government flats, right? I don't think there's an equivalent here. I'm not sure.
Well, I mean, the equivalent here really would be like commission house.
Yeah, which I don't think is comparable in this instance. No, but it is. I'm thinking like,
But
social housing flats.
it's an interesting difference because essentially HDB, like what Mark mentioned, is literally government housing.
Yeah.
But it's not like what we think government housing here in Australia.
Yeah. So what type of government housing is it then? Like who lives in those houses before they sell them?
Well, 85% I think of
more,
all
85 to
Singaporeans
90%.
live in what we call HDB flats,
Yeah.
which are so these are owned by the HDB, which is a statutory board, which is a body set up by the government. So it's sort of government housing, but and these are not freehold. So there's a lease. There's a 99-year
Yeah.
lease.
Yeah, right. Okay. So then why are foreigners still so happy to pay 50%?
Okay, they can't buy into HDBs. They can't buy into
That's
executive
reserved only for
Okay.
locals.
and PRs.
Okay. And is the value still as much on those knowing they've got a 99-year lease?
So it's interesting because actually I was just sharing Ganesh today that I just bought a house yesterday.
Congratulations.
A flat, right? A government flat. Now, before I get into that, right? So there are various categories, which is the HDB flats, and thereafter you have what's called the executive condominium that took over the executive maisonettes and the executive apartments. So those are very, very that's old school, right? So EC basically took over that, and it is catered to what's called a sandwich class. Because in Singapore, right, your household income is capped in that sense where if you want to buy HDB, for example, right, I can't remember what the figures are, right, but you're capped, let's say, for example, at $14,000 per month for the household income.
Okay.
So if you earn more than that, you cannot buy, right, what's called a built-to-order, the category called built-to-order.
Right.
Right, you can buy a resale flat, that's not an issue, but built-to-order, you can't.
Okay,
Right,
that's
so-
very interesting.
Yeah, so the good thing about Singapore's government is that they have very good policies in that sense, which unfortunately a lot of Singaporeans don't see.
Okay,
Yeah.
yeah. Because I mean, Australians, investors are all trying to push into this lower socioeconomic areas and they're
Yeah.
the cheapest.
Yeah, but interestingly, HDB doesn't equate to low socio-economical demographic in that sense,
Okay.
right? So now I mentioned I bought the in 2017 I bought an executive condominium. I bought it at 797,000 Singapore dollars,
What's that
which is
AUD?
about just plus 10%. So Aussie maybe about 800 plus, right? I sold that in 2023 for 1.365. So
So
that's
in-
about $500,000, $565,000
years.
gain within 5 years.
Yeah, okay.
Yeah. So now there's this thing called the minimum occupancy period as well. It's called in short MOP. Right now, the MOP basically dictates that you need to basically live there for 5 years before you can even sell. Now, why? It is to basically also it's part of the government's policy to curb flipping of properties. Right, it's not encouraged.
Yeah, okay. So that level of growth that you experienced, is that constant in the Singapore market, or was there something that spiked that?
Now let's just if you realize 2017 to 2023, what happened in between, right, was COVID.
Okay.
Right now,
So it
as you
affected
mentioned,
Singapore as well.
it supercharged the market,
Right.
right? And because of that, everything just went up.
Yeah, that's a huge level of gain.
Yep.
So it's not like that now.
And there's no capital gains on that.
Yeah, oh my God.
Yeah. Now, having said that, right, the older lease houses, I'm talking about 1983, 84, those that were built during that period of time, today's market, right, it's about, if it's a 1,300 square foot and above, which is about, translates to what, 112 square meters maybe? Now, with 56 years left on the lease, it's about $900,000, which is about 1.1 mil or 1 mil,
Okay.
basically 1 mil Aussie,
Okay.
right? So that's why I say that houses here are cheap,
Yeah.
right? In that context.
I just want to add
Yeah.
to what Mark was saying as well, and why it's interesting to give a little bit of a comparison between the Singapore market and Australian market. In Singapore, people are allowed to use their superannuation.
Yes, you mentioned
Yeah.
this, and
Yeah.
people should be able to in Australia as well.
100%. I couldn't agree more.
Yeah.
But what happens in Singapore is that it softens the blow of paying for your mortgage
Yes.
Yeah.
by relying on your superannuation. Right. So if husband and wife are earning, say, 100 grand, right, that's $12,000 a year into super, right? Times 2, so that's 24,000.
Yeah.
And if that can be put towards the mortgage,
Yeah.
right, it's a huge, sort of buffer,
Yes.
right, into the budget, the household budget.
Yeah.
And it drives the economy as well, because then they go out and spend money and, buy things and so on and so forth.
And so do you think that's quite positive across Singapore? Like, how does it affect as well the lower demographics? Are they left out of this, or does this positively affect them?
Well, I don't think they are left out in that sense, because
Okay.
for the lower demographic, lower income group of people, right, there's always HDB has this rental property for them, which is, if I'm not wrong, now my knowledge on this is quite old. It's about, I think, almost like $100 a week or something like that.
It's like our housing commission.
Yeah, like how
it's
like a housing
$100 a week,
commission.
okay.
Yeah. And just to add on to what Ganesh has said as well with regards to the Central Provident Fund, which is CPF, right? Which is the superannuation equivalent. It really frees up a lot of cash for families, right? Because knowing that you can use your super, you have this
Would.
amount of cash, right, on a monthly basis
Yeah.
to just survive.
Yeah, no,
Right.
it's very beneficial, and I can see the benefit from
Yeah.
it for sure. But I just, I don't know. So in Australia, because I'm so used to the Australian
Yeah.
property market, there's always a group that is heavily disadvantaged. I mean, they can be advantaged if they wanted to, but a lot of people prefer to stay disadvantaged and complain about it, if I'm honest. And I'm just wondering if it's similar in Singapore, or if everybody kind of benefits from it.
See, the thing is, if one can use your super
Yeah.
to start buying property, you will have a lot more people entering the market
Yeah.
Yeah,
than
for sure.
at the moment, because you have people with 100 grand, 200 grand in superannuation, but zero in savings.
Yeah.
Right. So you can see how that could help them get into the market if those funds were freed up to use as a deposit.
Yeah,
Yes.
100%.
Yes.
And in Singapore, you'll find that a lot of people use their, essentially their superannuation to fund the deposit.
Yes.
Whether it's a government flat or even a private property as well, that's something that can be utilized to pay as a deposit.
Okay.
So the struggle with so this is just an observation I made because when I first came here, I was trying to understand the property purchase market, right? How like what it takes to actually buy a property here. Now, 20% seems low, right? Granted that houses are between 1 to 1.5 mil, right? But the question really is, how many of us actually do have that disposable income
Yeah, a
to
lot
come
don't.
out with that 20%?
Many don't, yes.
Plus
Right.
stamp duty.
Plus stamp
Stamps,
duty,
yeah, and
right?
especially in Victoria, they're a killer.
Yeah.
Yeah.
So looking back, looking in comparison to Singapore in that sense, now it's a 25%. It's just very recent. They increased from 20 to 25% because they want to curb purchase as well.
For the deposit, sorry.
Yeah.
Is that- yeah.
So these are cooling measures,
Yeah.
right, by the government, right?
So you can't buy with 10%?
You can't. It's fixed at 25%.
Because see, a lot of people enter in Australia with 10%. And even last year we had the government incentive for 5%
Yeah.
first home buyer, and that was
Yeah.
a flop. Yeah.
So now with the increase into from 20 to 25%, right, it still makes it easier, right, and affordable in that sense because you've been working for X number of years. You and your partner can combine your superannuation,
Yeah.
right, and then put towards that 25%, right, as deposit.
Yeah.
Yeah. So if it's $1 million, it's $250,000, right, which is doable.
Yeah, for sure.
Yeah. So that then encourage people to say, hey, you know what? Let's just buy. Let's get married and buy.
Yeah.
Right?
Yeah. I don't know if I like you. We'll figure that out later.
This is it's a sort of it's a government policy really, but I think what the Singapore government is trying to do is to create a widespread property owning class. And in Singapore, you'll find that almost every other family owns their own home.
Yeah, okay.
Even if it's a HDB, a government house, right? They actually own it, and it's an asset that they can realize.
Amazing.
And I think it's like maybe more than 90%.
Yeah.
More than 90% of the population own their own home.
Wow.
They make it almost impossible for you not to have your own home. That's how it works. Because if you have a job, you and your partner have a job, which most people do. The fact that you've got a job and you'll be paid a super, right? That should necessarily just be enough to fund your mortgage. So a lot of people don't actually pay out of pocket for their mortgage. The superannuation contribution covers their mortgage. So, and the government has a lot of policies where, utilities and, they give you a lot of offsets and grants. So very, very, government policy is very geared towards making sure there's a high level of ownership.
Oh, wow.
It's unfortunate. I don't really want to get into the political sphere here.
Could go sideways, can't it?
But I do think it's unfortunate that we don't have that level of policy here at government.
It's awful. The policies they want to keep bringing out are crazy.
Over the weekend, I had a sort of a little party for my daughter's first birthday.
Oh, how lovely.
And so Mark was also there, and he came with his family as well.
Beautiful.
Now, I actually rented an Airbnb in Point Cook in a place called Century Lakes.
Okay, nice.
Century Lakes is a sort of a development which is sort of lakeside, with
It's very
man-made
nice.
lakes. It's very beautiful, very pristine. And so it was sort of a luxury Airbnb. It was a massive house with a swimming pool and outdoor deck and
Gosh, lucky 1-year-old.
It was very pimp.
it was
Yeah.
totally pimped out.
Feels like a Troy Candy style first birthday
Yeah,
party.
it's a nice lake where ducks
Yeah.
were swimming. It was by the lake and it was
Yeah.
beautiful.
Lovely.
And so I was just chatting with Mark while I was sitting on the deck having a drink. And Mark said, how much do you reckon this would go for in Singapore?
Yeah.
Because we have similar properties in Singapore, what we call Sentosa Cove.
Yeah.
Similar type properties. And we were just looking up online and we were looking at $30 million. $30 million in the ballpark was what similar type properties were being sold in Singapore.
Right.
That property that I was living at was on the market, and the asking price was 2.8 million and
yeah,
above.
wow.
So a tenth of what a similar property was going for sale in Singapore. Now, I don't say that to say that we've got cheap property, because we don't, right?
Yes.
Yeah.
We don't. But comparatively, I think if you look at what's overseas and the value that you get for the property you pay, it's actually not too bad.
Yeah.
Yeah, okay. It's very interesting. And I mean it's still so unaffordable to so many Australians, and also, obviously that is an effect of policy and who's in charge.
I mean, you've got a luxury bungalow with, lakeside views for 2.8 million. In Singapore, that would get you a 4-bedroom apartment,
Yeah, wow.
in a relatively good area, but still 2.8 million.
Yeah.
Very interesting, isn't it? But on the flip side, when we spoke last time, you were talking about property in Cambodia, and that is tremendously cheap.
Yeah, Cambodia is a different ballgame altogether, because obviously it's an emerging market, right? So I've worked there for about 2.5 years.
And what do you mean emerging market? Like, so are investors starting to grow interest suddenly there?
That's a very broad term to begin with, but mainly them coming up within their own economy, right? Trying to, I don't know, from third world to second world sort of a thing.
Sure.
Right? You see a lot of foreign direct investments coming in from different countries as well, like Japan, Korea, Singapore. Singapore is one of the biggest FDI players as well in Cambodia.
So obviously there's interest there. Like, obviously it's worth investing in at this point if people are starting to start entering.
Correct. Now, the optics on Cambodia is very bad, right? It's negative because people call it Scambodia, right? Because now, I don't blame them, because at the end of the day, right, a lot of these scams actually do come out of that region, the Indo-China region, which is Laos, Burma, Thailand, and Cambodia.
Sure.
Right? And now, if you heard of the pig butchering scams, right, where basically they fatten up the victim, and then after that, what they call is they slice open the pig, because the pig basically give them a lot of money, right? They invest into their platforms and stuff like that, and then they just basically ghost them.
Oh.
Yeah, so all these basically came out now.
So wait, is the pig a metaphor for a person?
Pretty much.
Okay.
Yeah.
Oh, that's awful. Yeah.
Yeah. So if you Google search pig butchering scams, now most of it came out from Cambodia.
Right.
Right. But I can tell you right now that Cambodia is not what it seems, right? From what the media actually portrays it.
Okay.
Right. Because I've been there for a while. Right?
Yeah, you're working there.
Yeah, and they are very they are a very group of lovely people. They're very welcoming, and you actually do see a lot of Australian working in Cambodia.
Really?
Right, because Ganesh and I, we actually went to Cambodia in January earlier this year. We met with
we met with the Australian Chamber of Commerce, Australian Cambodian Chamber of Commerce.
And then we also met one individual. I'm not going to name his name. He is from Melbourne, right? Now, I have dealt with lawyers who are originally from Melbourne as well, right? And it's not a handful of them; it's more than a handful of them. Yeah. So, and in the company that I used to work for, we do have a couple of Australians as well. Right, so you see how they are trying to improve, right? But because of the negative portrayal on the country, sometimes it's just very difficult to come out of that first, because the reputation is a very big thing.
Yeah, of course.
Right now, if you've been to Siem Reap, right? Ganesh has been there. I've been there. Right, it has actually changed a lot from what it was. You see proper pathway, pavements. You see proper roads, right? You see proper infrastructure, like basic infrastructure.
But so recently there wasn't.
Recently, when I mean recently, it was within the past 5 years.
Yeah, wow.
Right? They actually improved, right? Which is a good thing.
Of course.
Right? And then in the various projects that I was working on as well.
So what were you doing over there?
So I was the head of legal for a real estate development company as well. And they also have multiple businesses like private equity. They do a lot of sort of Uber sort of a thing, right? So there's just a lot of, they basically own 50% of Cambodia.
Holy crap. Yeah, wow.
Right? Just in a nutshell.
Yeah,
right. So I oversaw a lot of projects in Sihanoukville as well, which is the south of Cambodia, right? Where we were actually working on reclaimed land. Now, basically, that land was to be converted into a new city. So we were building a city, literally. Yeah.
Is it still being built?
It's still being built. Yeah, it's a long-term project.
Yeah.
Right. But if I'm not wrong, things are on hold now for reasons I shall not say. Right? Not to your listeners.
No, I feel like maybe I might have I might know maybe from previous conversations. I don't know.
Yep. Because I used to work for one of the biggest Chinese-run
Yes.
company.
Yes.
Right. And it's very interesting because the sort of exposure I got from that company, you don't see it anywhere else in like first or second world sort of jurisdiction.
Okay.
Yeah.
Good or bad exposure?
Very well. Let's just say it's bad.
Oh no. Oh, okay. Yeah. Okay.
So Cambodia is a very interesting market, right?
Yeah. So what you told me the square meter value over there of land? Can you refresh my memory?
So now back then when the airport, so the Cambodia Phnom Penh has a new airport, right? And it's beautiful, right? But back then when they were in their previous location, it was about 50 cents to $1, from what I heard.
This
For a
is
square
this
meter
is
of
land
land?
price. Yeah.
Land price.
Holy crap.
Yeah. So it's cheap, right?
AUD?
USD.
A USD. Okay. Yeah.
Which is
still it's a dollar.
which is still cheap, right?
Yeah, that's crazy.
Now, don't quote me on the exact price, but that was basically what I heard and what I saw.
Yeah. So that's like effectively it's like $1,000 for a small block of land.
Pretty much, yeah. So and it goes up to I think $1.50, $2. Yeah.
Still?
I'm not sure about now.
Okay.
Right. But that was 5 years ago.
Yeah.
Yeah, it's very, very interesting in that sense. And rental, right? Now rental market there is about, let's say, a 1-bedroom apartment. It ranges from $350 USD to $700
Per month?
per month, right? Which is cheap.
Yeah.
Because what we're paying here is per week.
Yeah. But what
Right.
about versus the value? Because I mean, whoever owns those apartments would be
Okay.
making bank because
So-
it'd be so cheap to purchase, right?
Let's say in the heart of the city center,
Yeah.
right? You're probably looking at about $350,000 to $600,000
Yeah.
for the apartment itself,
Yeah.
right? Which is affordable
Okay.
to the expat market.
Okay.
Right.
Yes. Not the locals, obviously. So
Now
are the
the-
locals still living in like third world conditions?
Yes and no.
Okay.
Right? They are very exposed. So you see, the median age in Cambodia is about 25, right? And they're very exposed to these sort of luxury living in that sense, right? So they try to get themselves out of poverty and try to get into the market or get into jobs that pay well. But unfortunately, they don't pay well.
Okay.
Yeah.
What will be like a median salary? in
Now,
Cambodia?
there is no minimum wage, right?
Oh.
So what we're looking at, if a person works in a factory, we're probably looking at about $300 a month,
Oh.
right? It's quite sad to hear,
Yeah.
right? Now, my legal executive back then was drawing about 800 USD per month, right? And I was like, no, this is very sad. I'm going to bump you up to 1,200 because we can.
Oh, that's lovely. That's
Yeah.
so kind, Mark.
Yeah, so I did that for them,
Yeah.
right? Because at least they can get to enjoy like basic stuff as well,
Yeah.
right?
And I mean, how unfair is that too? Because they've obviously brought you over from overseas.
Yeah.
So they're like, well, we need to pay you normal. And then everyone else would just
Yeah.
won't tell them.
Yeah. Earlier, I was saying there are a lot of foreign direct investments into Cambodia,
yeah.
right? The thing that we learned as well recently in our trip is that there isn't any source of alternative investments in Cambodia
Outside of property.
outside of fixed deposits,
Oh, okay.
right? Which the bank offers, right? Now, if you want to get into the property game, you need to have capital, right? Which, well,
Oh, you can't get a mortgage.
you could,
Okay.
right? But then the question is, what is the ratio in terms of the loan you want versus what you're earning,
Yeah.
right?
okay.
How much can you get realistically, right? So then we basically pitched to one of our clients with regards to
An Australian client.
an Australian client about launching a fund, setting up a new fund,
Yeah.
right? In that region, right? Now, he got a lot of, according to him, very good friend of ours, a lot of negative comment because the optics on Cambodia is like what the media portrays,
Yeah.
right?
Okay.
It's just very negative. But me being in there for a while, I wouldn't say 2 years is 2.5 years is a long time, but long enough because I'm exposed.
You've got a good understanding.
Yeah,
Yeah.
of the market, right? And there are a lot of Singaporean players as well, right? From F&Bs, real estate developers, even fund management, right? That actually took that step of faith, right? And with calculated risk and enter the country, right? It's not so simple as just saying, hey, you know what? I got this fantastic idea. I'm coming in, right? And
No.
it'll work,
Are
right?
you allowed to say how much it is?
Let's just say it's in the excess of 10 figures.
Yeah.
Right? Is it 10 figures?
So you can't just really come in somewhere and say, hey, we just want to deposit this.
Yeah.
Yeah.
So the nature of that fund basically is to raise money within the retail investors, or rather the investors in Cambodia, and the fund is actually distributed through a bank, a very well known bank, right? So they are the issuer of the fund and distributor of the fund that goes out to the investors, right? So what investors do is they will basically buy that unit trust or that share into the fund and it goes into Australia
Yeah.
property market. Now, why? The reason here basically is to give a piece of investment, or rather to provide that alternative source where people can, instead of having to deposit thousands of dollars, they can do small amounts.
That whole fund will be coming into the Australian property market.
Pretty much, yes.
Yeah. Investors at that level, what are they targeting? Residential or commercial?
Now, it's called the okay, well, I won't say the name, but it's a property fund that goes into private lending as well, financing,
Okay.
right? For your mass finance, money partners as well,
Sure.
right? But this group of borrowers, they need to be profiled first, right? It's not any Tom, Dick, or Harry say, hey, you know what, I need cash
In Australia or Cambodia?
in Australia,
Australia.
right? And then and it's not us being having that liberty to just say, hey, you know what, this is X amount of dollars you can take. Yeah, so there are a lot of caveats attached to it, right? So yeah, that's pretty much how it works.
I think
interesting.
leading on from what Mark was mentioning, we do a lot of legal work in this sphere as well, in terms of, historic private lending, money partner sort of arrangements where you've got developers, or you've got, mum and dad flippers or renovators buying property. They might buy and then they've got a mortgage with the bank, and then they need a little bit of capital to do some work on the property, some
We've come
renos.
to you for money partner agreements.
Well, that's right.
Yeah.
So that sort of thing is just been historically has always been there.
Yeah.
Now, with this fund, what we're trying to do is to bring in a sort of warehouse facility
Yes.
into the market where, we've got large sums of capital which is available to then lend out to individuals at very competitive rates, So whether it's a first mortgage, we at that rate, we are starting to compete with the banks.
Really?
Not
Directly.
because it's not direct. It's not a direct comparison because we don't, obviously do the level of due diligence that the banks do. It's not a full documentation process.
But some second tier and third tier lenders, they're about 9%. So
That's right. So we're starting to sort of compete on the second and third tier sort of space, and because that's really on the first mortgage level, and then obviously you've got second mortgage, you've got mezz finance, caveat loans. So it's a sort of good facility to lend out because the demand is just relentless. The people wanting to borrow, the banks are knocking them back because they're either overly geared, they've got really not much borrowability or serviceability, and it's just hard at the current market to get banks to come to it and see your vision.
yeah, that's it. And I think it comes down to vision, isn't it? Because sometimes whatever you're trying to do, what you're trying to get to, the numbers stack up, everything stacks up, but you can't get the bank to see that. So sometimes these alternative lenders help you get to that next step.
The private lending sphere is going through a little bit of a revolution now with a lot more institutional players coming in. And you still got your, like some people will have a super fund where, or they do a lot of lending. You've got some other businesses that have been lending out to private investment for a long time. That will still be there, but you're getting more and more institutional money coming in, and it's just becoming easier for people to borrow money without, paying over the top rates.
Yeah.
You obviously do a lot of these money partner type of agreements. So where do you see where these can go wrong potentially?
Yeah, look, Good point.
Have you actually seen somebody get into a lot of trouble with it? Because obviously when you're going to these alternative lending options or you're going with a money partner and you potentially have a lot on the line, have you seen any actually go sour, and what did they do wrong?
Look, the answer to that, there's always going to be issues with people getting themselves caught up in a bind. Now, the concern is that when you've got investors, right, or you've got people wanting to do some renos or developments, right, the feasibility is so important. You've got to bake in a lot of slack into that. Because I can tell you, one of the things that you don't foresee is, obviously you're at the mercy of trades, right? You're at the mercy of the market, the property market. You're also at the mercy of sometimes weather, right? Inclement weather. So if things don't go according to plan and you don't bake in enough for holding costs.
That's it.
Right.
I did an episode on this just before, and it's about your feasibility has to be so tight. You need to allow contingency. You need to allow interest. These are all things that people don't factor in.
Absolutely. If it's done properly, no problems. But if you don't do that properly, that's when, things like if you start going into default, because every private lending agreement would have your standard variable rate, right? But then there's also a default rate if you do not comply with that. Usually if you don't pay it up within 3 months or 6 months, because these are short-term loans, right? They're usually for 3 months or for 6 months, sometimes 12 months. The rate is a bit higher. I mean, 15 to 20%, it's normal.
Yeah.
Right, for some of these sort of lending. So if you pass your date, right, for when the loan is due and you're in default, the default rate generally applies, which could be 24%.
Yeah.
Okay.
Or 30% in some instances. So you're starting to pay, and then you got all these default costs, and then legal costs added onto it. And then the worst case scenario is that if the lender is feeling very fidgety and feeling very worried that, they may not see their money, they've got the right, and usually in this case, it's usually the first mortgagee that has the right to foreclose, right? They might just go to the first mortgagee and say, look, we've got all this debt, right? Can you then go ahead and, because it's the bank is usually the one that has the right to foreclose on the property. And so the other thing is, even if the lender is sitting back tight and not doing anything, it's not the end of the road, because when you sell, you're relying on them to release their caveat or their mortgage.
Yeah.
So they get you at that point, right? So it's always important to understand, be very mindful of where you're sitting on, and make sure that you bake in enough into your feasibility.
Yeah, and have an exit plan.
Have an exit plan, 100%.
If SHIT hits the fan, have an exit plan.
100%.
I think fundamentally, right, one, I would say not mistake, but oversight, right, is that partners, they need to know and trust each other, right, first, before they can even go into, put it bluntly, into bed with each other.
Okay.
Right, because essentially a money partner, a sort of arrangement, it's sort of like, marriage is a little bit too harsh.
Yeah.
But in that sense, right?
So you don't believe that it could just be a commercial business only relationship? You think you should get to know them?
Which is why, right, the law firms that you select or you choose have to advise you correctly, right? Like for example, if you're going to a money partner agreement, right, make sure that your joint venture agreement it's tight.
Yeah.
Right. Or are you guys coming in together as a company, right? Or a trust or whatever, right?
Yeah, okay.
So in that mechanism or in that operative aspect, right? It's very important to actually understand that, how it works, right? Because people are always I'm not saying not blinded, right, by what you can potentially make, right? But it's the fundamentals that, or rather the journey that gets you there.
Yeah, people look at opportunity, and that's great, but you actually need to look at the numbers.
That's such a good point, because if you're buying or if you're doing a development with someone who's not a family member, might be someone that you are acquainted with, or you might have done a course, a property course together, right? It's not the end of the road. Like, the important thing is to understand handshakes are only as good as how much people are relying on that.
Yeah.
It's always a good idea to put pen to paper.
Yeah.
And depending on the structure, right? So if it's a JV, right, you got a good JV agreement drawn up, If it's under a company, you get a good shareholders agreement drawn up. Likewise, if it's a trust, get a unit trust.
Yeah.
So it's fixed, not a discretionary family trust, but a unit trust with a unit holders agreement. So what the deal is, what each partner's role is in the job, and when the property is expected to be put on the market, how the proceeds are to be distributed. So really, at the end of the day, there's not an opportunity for any disagreements.
There's no grey areas.
There's no grey area.
Yeah.
There's an outcome for every possible scenario.
Correct.
Yeah.
Some people balk at paying for the compliance and the legal costs involved, and we get it because we're lawyers. We get it.
Yeah.
But at the end of the day, if you're doing it as a business, right, it's a business expense. I mean, I would say it's worth the peace of mind to make sure that things are going to be 100% at the end of the day. There's no ifs and buts.
Yeah. When it comes to any of this legal stuff, even just with conveyancing, I say, don't shop around for the cheapest or don't try to get out of it as lightly as you can, because the outcome of a mistake can cost you tens of thousands, or if it's a whole property, I mean,
Exactly.
could cost you $500,000, you know?
Like same simple things, like if you're buying a property, I mean, it's always advisable to do a building and pest inspection because you don't know what's inside. You're not trained to identify things like that. So get one done, because if it's a negative, at least you know what your options are. You might try and negotiate the price down to take that into account.
Yeah.
The other important thing I should mention is if people are buying a property, especially for investment, right, make sure that, if the property is unconditional, right, so you put in an offer, it's accepted, the property is unconditional, always make sure you get your insurance at that point, because if you don't, and something happens to the property from the time it goes unconditional to when you settle, right? If the house, let's say burns down, right? You have no recourse,
Yeah.
right? All you're going to get is the land. You're essentially buying the land, right? And whatever that's on it. And if there's nothing on it, well, tough luck.
Terrifying.
So it's a point that I can't stress, because it's something that's happened to one of my clients before.
Oh, no, really?
Right. So it is such a minefield. You always must get insurance after the property goes unconditional,
It's a great tip.
even before settlement. So settlement is not when you start getting your affairs in order. Once the property is unconditional, you must get insurance, because you are obligated to settle, right? And if there's nothing there, well, then tough luck.
Yeah, it's yours now.
Contracts, agreements, in money lending sort of arrangement, money partner arrangement, right? They only this is my perspective, right? They provide certainty and enforceability, right? But I'm actually handling a case right now, Amanda, where everything is actually in place, agreements and whatnot, but the lender, right? It's can I use like French? Yeah.
Yeah.
The lender is actually being a pain in the ass, right?
Yeah.
Because she knows very, 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 very clearly that she owes the money, right? But yet she's like saying, you know what? I don't care. Yeah, sue me if you want.
Ooh.
Yeah. So I think the misconception, or rather the thinking about agreements in the general sense of things, right? Is there to provide certainty, right? At least to yourself, and assurance, because you're lending out the money, right? But there are so many components in play as well, right? That could actually derail the entire transaction,
Yeah.
right? So that's something which I think people should actually bear in mind, right? That as much as the agreement can protect you, right, you still have to deal with individuals.
You're still dealing with people.
Yeah.
And sometimes as well, like these orders, when you go to court or something like that, well, they're as good as the paper they're written on, because you can't physically get things out of people sometimes.
Because, I mean, at the end of the day, right, it's easier to go into bankruptcy and not pay.
Yeah.
Right?
That's it.
And just, move on, right?
Yeah. Yeah. 100%. Okay. Well, thank you so much. You've given so much amazing insight and value today. So thank you, Ganesh and Marc from Ganesh Legal.
Thank you.
If any of my listeners would like to know how to get in touch with you, how do they best reach out? If they would like help with legal matters or money partner, documents or conveyancing, how can they reach out?
All right, so shameless plug here. You can always look us up at Ganesh Legal Group. And we have two offices, both in Sandringham and Mornington. You can, ring us and have a, obligation-free chat. Whether you're looking to buy property, sell property, if you've got, an agreement that you like drawn up with a family member or with like a third party, we can do that. We can formalize that for you. A lot of now, what we're seeing is a lot of mums and dads are lending to children,
Of
well,
course.
essentially bank of mum and dad.
Yeah, yeah.
So if you're bank of mum and dad, or you're a child who's wanting to borrow money from your parents, we do a lot of these as well.
Good to know.
Sometimes it's also to secure that money as well. So in case, the kids go through, say, a separation, the parents can at least say, well, the money that I've given you, it's not a gift, it's a loan.
Yeah, nice.
So it's protected, right? So we're doing a lot of these sort of agreements and arrangements. So look, just give us a call, and we're happy to talk to anyone out there who wants a bit of advice, or just run through some of the issues. And if we can do something for you, then it'll be something we'll take on.
Or a shoulder to cry on, no issues.
Separation will be here for you. Thank you. All right. I just wanted to say that everything that we've discussed today is general in nature. If you perhaps relate to any of these topics we've discussed, they are not personal to you or your situation. So please reach out for legal advice of your own. Buying Melbourne, move with intention. Until next cycle.